What's up, everyone? It's Kadi with MoneyVest. So this is going to be a market update for today. Tomorrow, we've also got the JOLTS numbers. So job openings are going to be coming out, which obviously is going to be a very, very important metric for the entire market, as well as the unemployment numbers later in the week. So on the first Friday of this month, so on basically later, which is going to be about April 5th, is when the first Friday of April happens. And of course, we'll get the unemployment numbers for the previous month as well. So as you know that I am traveling right now, so I am in Manchester and London, kind of visiting my friends and also watching a lot of football games. So the audio and the video is not going to be perfect. And this is actually quite an interesting and eventful trip because a lot has happened, which I will be sharing in our Discord at some point. But I'm just starting to feel a little bit more exhausted, but we'll be continuing with these, of course, updates and posts for the foreseeable future, and we'll be back on track, of course, back in my home office in Dubai by next week. So again, thank you so much for joining, and I really do appreciate all of your support. Link's going to be down below for our Discord and our Patreon, and there is, again, the first week of the month is the best time to join if you're interested in taking advantage of that as well. I do want to mention that, again, our moneyvest.com platform is going to be available very, very soon, and I believe that is going to really be super helpful. I mean, that is something that we're kind of working hard towards building that entire platform, and at the end of the day, I really want you to experience what it's going to be like. So once it's fully built out, once we actually have the platform in place, then we'll be doing a soft launch for members only. That's going to be a beta launch, and we'll gather a lot of feedback from all of you and then make changes, make tweaks, and then of course it's going to be available for everybody. But really the idea is that you'll have access to all my financial models, all of my calculators, all the MoneyVest metrics, including our personalized M score, which is one of the fastest and most efficient ways to evaluate individual stocks. And then, of course, not to mention a lot of macro updates and some options analysis, insider trades, analyst estimates, along with the ability to track and manage your entire portfolio through a very cool integration that we're also working for. So again, lots of updates. All of that is going to be available for members only. I am going to require some time because dev work is not easy, especially when you are dealing with a lot of API providers and a lot of data that's coming straight from the New York Stock Exchange and the NASDAQ. So again, there's a lot of work. There's a lot of contracts that need to be, we need to kind of go over, and there's just too much work that we're dealing with, and it's completely bootstrapped. So I'm kind of doing it all on my own. I've got a hired tech team and legal team and all that stuff. So super excited for that. Just wanted to give you a little bit of an update and an announcement for that as well. But without further ado, let's just get started with the market update here. Of course, markets on the day were mostly flat, with of course big tech pushing higher, and we did have the 10-year treasuries, the 10-year yield, of course, ripping higher very significantly. So again, join our Discord, join our Patreon, all that good stuff, with the first week of the month being the best time to join. The link's going to be down below, with the 10-year treasury is now sitting at well over 4.3%. I did a video on this earlier today, so make sure that you do check that out as well if you find the time. Now, going over to the markets, Google and Meta pushing higher, with Broadcom, Micron, AMD, Microsoft, and Amazon, all of them ripping, and consumer defensive, healthcare. We had financials, we have industrial, real estate, all of them pulling back. This right here is, again, the entire market, and again, you'll notice that most sectors were actually red. We did have, again, majority of sectors selling off and pulling back, with communication services and energy pushing higher. And in the last 1 week, of course, most sectors are green, with technology being the only sector that is down in the last 1 month. Again, all sectors are green except for real estate, which is slightly lower on the month here. Now, Bitcoin pulling right back down under 70,000, with Ether just over 3,500. And this right here is another huge catalyst that I wanted to go over, with America will be left with a severe irreversible scars if national debt goes unchecked. Now, a blockbuster report warns that the bill is higher than believed, hitting 141 trillion by 2054. Absolutely insane numbers we're talking here. So national debt is fast becoming, of course, a huge conversation piece, and is becoming a thorn in the side of the American economy that nobody wants to extract, and it will continue to cause damage, sending the US into financial crisis and 10 years of stagnation. And that is increasingly the opinion of a growing number of experts who are sounding the alarm over the pace at which the US government is gathering debt. And more importantly, they fear that this debt will remain or mean the country will not be able to afford necessary borrowing in the future, in addition to the funds needed to service the existing debt. And among the ranks of those in concern camp are, of course, Fed Chair Chairman Jerome Powell, JP Morgan Chase CEO Jamie Dimon, Bank of America CEO Brian Moynihan, and BlackRock CEO Larry Fink, and Wharton Vice Dean Zhao Gomes. And their outlook is evidenced by a March report from the Congressional Budget Office. And the CBO estimates that by 2054, the public debt will represent 166% of the GDP, reaching about $141 trillion. Now, this is, in my opinion, a very, very big deal because nobody really knows the end game for the U.S. economy when it comes to the level of debt that they carry. Because at the end of the day, even Warren Buffett did not have an answer to what this is going to do to the dollar, what this is going to do to the risk-free rate, which is the 10-year treasuries, the yields in general, the bond market. And of course, if the U.S. is either going to be able to function with this level of debt, because $141 trillion is no joke. And when you have some of the most renowned people in the world of finance. I mean, Federal Reserve Chairman Jerome Powell has already mentioned that we are on an unsustainable path. Jamie Dimon has mentioned that this is very concerning from a long-term standpoint. Again, multiple people have addressed, how unfeasible this is going to be. At the end of the day, of course, the U.S. spending more money than what they're bringing in through tax revenues definitely makes it a very, very challenging environment over the long term. And again, nobody really knows the answer to how all of this is going to end. And currently, the nation's $34 trillion of debt is approximately 99% of GDP. And according to the CBO, which is the Congressional Budget Office, and I'll actually be doing another video on this issue very, very soon, will steadily increase over the next 30 years. In the near term, the CBO expects debt as a percentage of GDP to exceed the record peak of the Second World War by 2029. And this would slow the economic growth, push up interest rate payments to foreign holders of U.S. debt, and pose significant risks to the fiscal and economic outlook. It could also cause lawmakers to feel more constrained in these policy choices as well. So Joel's numbers coming out tomorrow. I will be doing a more separate video on, of course, the job openings, the unemployment report, all that good stuff later this week. Not to mention that we'll also be going over this CBO's Congressional Budget Office expectations by 2054, getting up to over $141 trillion, which again is no joke, a very, very significant number for us to be looking into. Now, going over to the markets, and again, this is the unemployment rate, unemployment persons, and the ratio between job openings and unemployed persons. Very, very important. This is really what's going to dictate how the Federal Reserve kind of looks at interest rates and looks at the economy as well. Now, going over to volatility. So we did see a little bit of a spike over 5%, back over to 13.6. We're keeping a close eye at 15 to as much as 18 to 20 levels. This is really where it becomes a good buying opportunity. So as I've already mentioned, that this right here is quite literally, in my opinion, a much better dollar cost averaging, much better buying opportunity for the market. And of course, right now we're just consolidating sideways here inside this red rectangle as well. So we're constantly just kind of trading in that level. We're very, very muted at the moment. And of course, a huge area of resistance, not really a resistance, but we're not able to break past that level is going to be 15. So the moment we break past 15, get up to over 18 to 20, very, very important levels to keep in mind. And that's where, we'll start dollar cost averaging. We'll turn the dial towards cash deployment back in the markets as well. Ether pulling back, consolidating sideways a little bit. Bitcoin also just a little bit under 70,000, just trading sideways inside this red rectangle at the moment. And crude oil prices continue to rip higher, which is even worse. So what we're witnessing here is the trouble trifecta. The 10-year treasuries, the crude oil prices, and the dollar index, all of them continue to push higher, which is most likely going to put pressure on the equities market sooner or later. And I say sooner or later, it's only a matter of time. It's not a question of if, it's a question of when the markets are going to start to feel that pain, considering the 10-year treasuries are ripping higher, considering even crude oil prices are higher. So far, year to date, 2024, crude oil is higher over 20%, and that's eventually going to be reflected in the inflation report as well. S&P 500, mostly consolidating sideways, and as we have already discussed, it is trading in a higher high and higher low pattern. So this right here is going to be that uptrend. Support level is going to stay put down to 51.82, down to as low as 5,061 as well for this index. And of course, a much stronger support is going to be aligned with that 50 moving average as well as that previous support level, and a much stronger area of demand sits somewhere between under 4,800 inside this green rectangle as well. Talking about the NASDAQ, so IXIC, just a lot of consolidation sideways. This right here is going to be a huge resistance to keep in mind for NASDAQ. Support level is going to be aligned with that 50 exponential or a simple moving average, with another very nice support sitting right over there, kind of in that confluence previous support level that we validated, along with that 50 SMA sitting at 15,900, almost at 16,000 points for the NASDAQ as well. Talking about Apple. And Apple here continues to trade downwards, kind of consolidating sideways in that range. So really just, at that green rectangle of support, that's the first area of demand that we've talked about. My target, my resistance still stays put at close to 195 to as much as 199 for Apple moving forward. Talking a little bit about Amazon, and Amazon here continues to slowly and steadily drift higher with a support level that's going to stay put down to 178 to as low as 159 for Amazon, with a target and a resistance all the way up to 188 for the company. Tesla, tomorrow is the big day. We've got the delivery numbers coming out. I already did a video on Tesla's delivery numbers and expectations. Make sure that you do check that out. We did get a little bit of price cuts here on the day with some potential underweight ratings on Tesla. So the momentum, the quarterly numbers, all expectations are not that great, considering a lot of the price cuts are leading to lower margins, which is leading to lower profitability, which is leading for somewhat higher valuations for Tesla. So support level is going to stay put right over here, down to as low as $160 for the company as well. Just checking the audio and the video is good here. Perfect. And then going back over to, let's say, NVIDIA. And NVIDIA on the day was also basically consolidating sideways, so not really going anywhere. But this right here is so much consolidation for NVIDIA. So resistance 971, support level at close to $844 for NVIDIA. Lots of consolidation sideways in that range. And it's really just been trading between 844 and 974 for NVIDIA. Advanced Micro Devices consolidating sideways. Support level is going to stay put right over here at close to $164 with a massive resistance right over there at 217. We actually had a trade idea on AMD that I shared with all the members last week, which I believe is now starting to perform a little bit better, because it is now starting to move back higher, and we are, in the green by a little bit over 2 to 3%. My target and resistance is still going to be all the way up to $220, $218 per share, with of course the RSI and the MACD looking pretty solid, with a nice potential for that reversal back up. Talking a little bit about Meta platforms, and Meta here on the day just consolidating sideways. Resistance is going to be 524, support all the way down to $450 for Meta, with a huge gap to fill all the way down to as low as $383 per share. Netflix, on the other hand, just pushing higher a little bit. Resistance is going to stay put roughly at around $623, $624. And of course, a support level inside this green rectangle, in a very nice solid area of demand between 560s and 570s. Talking about PayPal, and PayPal here really struggling and not able to break out above that resistance that we talked about back at $67, $68. We really needed PayPal to validate 3 extra days and continue to stay above with that golden cross to actually turn that into a super golden cross. But right now, it's not looking good, as we are once again getting rejected at this resistance at $68. And the bottom line is the RSI, MACD, and of course L3 banker oscillator, everything looks overbought, and it's now starting to roll over once again at the moment. So that right there is where we are. Support level, of course, inside this green rectangle for PayPal at the moment. So a lot of consolidation sideways in that range for PayPal. Talking about Visa, and Visa here on the day also selling off, coming down to that 50 SMA. 273 is going to be that next level, next support level to keep in mind. And again, we are starting to see the RSI and the MACD, and of course the L3 banker oscillator selling off and pulling back as well. And then finally, we've got Google and Microsoft. So Google here on the day pushing higher with a very, very nice breakout over 2.5%. We actually, again, had a trade idea on this stock, has done incredibly well, hitting a new all-time high, I believe, for Google at 157. Huge congratulations to everyone who's been trading or investing in this company. New all-time high for Google, which is absolutely phenomenal. And then, of course, finally, we got Microsoft pushing up a little bit over 92 basis points. Support level is going to stay put roughly here at 396. I did a full video on Microsoft as well over the weekend. Make sure that you do check that out to get a little bit more insight into that stock. And Enphase, on the other hand, here pushing down a little bit over 2.2%, but of course continues to get validated at that support at 107, 108. Of course, we did have a very nice rally on Enphase as well. In fact, Enphase was also one of our trade ideas, which is now starting to perform a little bit better because we did analyze it. So this right here was the entire analysis with a target and a resistance back up to 138, 134, and a profit potential of almost 28 to 30% for this company. And finally, we got Costco, and Costco here on the day also pulling back, rightly so, because it's been incredibly overbought and the valuation's been super rich, super high for this company. So support level is going to stay put down to $711, all the way down to $678 to as much as $644 for Costco moving forward. So hope you all enjoy this video and a complete update on the markets here. Again, this is an employment week. We've got lots of data coming out, so lots to unpack. Not to mention, of course, the very important debt, the national debt. That is something that we will discuss in our future videos. But again, I hope you all enjoyed it, found it helpful. Make sure that you drop a like and subscribe to the channel. Links to our Discord and Patreon is going to be down below. Again, first week of the month is the best time to join. And I promise you all the members will have the beta launch access very, very soon with some amazing features that we're going to be rolling out over multiple phases over the long term. And I quite literally am confident that MoneyVest.com is going to be the best financial analysis software that you've seen, and we're really going to be listening to you to make changes so that it's very functional and usable for all the people, for all investors out there basically. So again, hope you all enjoyed it, found it helpful. Make sure that you drop a like, subscribe to the channel. As always, happy investing, and I'll see you all in the next video.